There's some financial news that came out literally this morning. Plus, we have to talk about the massive 5% spike in oil yesterday. I also want to translate certain portions of Charles de Gaulle's speech about gold and real money and the way that America was ripping everybody off so that you can hear it in English. And if you're a subscriber to the Peter Leeds newsletter, it's a very important thing I want to tell you. I'll tell you at the end because not everybody's a subscriber to my newsletter. If you are, make sure, even if you skip ahead right now, go to the end of the video so you can hear what I have to say about the Peter Leeds newsletter. I believe the stock markets are going to have their day. I do believe that the higher they go now is just going to be the greater the height that they fall from. So markets go up 5%. It's not going to make a difference at the end of the day unless you're going to capitalize on that day trading moment. It's all about syntax. It's something I learned from Tony Robbins, where you could say the dog bit Johnny, or you could say Johnny bit the dog. And it's the same words put together just in a different syntax, in a different order. And it has a totally different meaning. So how to play this as the markets do soften pretty soon is about trying to find the right timing. I'm not even trying to do the timing. I'm just understanding that this market's going to be coming down, and until it does, it's just getting close to the point where it's going to come down. And if it goes up higher, it doesn't make a difference in the scheme of things. And I expect that the markets, when they fall, they're going to take down almost every stock significantly, over 50%, probably 60, 70%. But gold prices and gold stocks will not be one of the ones that fall in that first wave. But I believe that there will be a time to cash out all your profits from the gold stocks and move that into some of these high-flying Magnificent 7 stocks that are not going to be trading at such a lower price. But I was putting out a special alert to subscribers yesterday, and I was talking about all the stocks we've mentioned about gold mining, silver mining, precious metals, and it was amazing to see how many of them have doubled or tripled. On a list of about 20, I said, here's the ones that are still in good buying ranges, and I think there's only 2 or 3 of them. Almost all the others are either doubled or tripled since we started talking about them, which is an example of when my strategy of what I do, not for you to do, but what I do is I pinpoint invest. And I said years ago that gold was going to be the best performing thing to invest in. Gold mining stocks are going to be the best rewarding investment. And I put everything into gold, certain select oil companies, and also some silver mining companies. For now. It's not forever. It's just at this time, and it's being proven out so far, that yeah, this is a time to buy gold, and it is the time to buy silver for sure right now. And like I always tell you, if you're waiting for the stock market to come down, whatever you're waiting for, just wait. Everything that's going to happen is going to happen. I'm just watching it approach. And Fernando sent in this chart about all the different countries and how much gold they have in their holdings. And it reminded me of the time I showed you that chart before. And I wanted to say, here's the interesting thing, that China, by purchasing about 1,000 tons of gold, which they buy 3 figures in gold from quarter to quarter sometimes. Sometimes they sell, sometimes they don't buy anything. But they have had 3-month periods where they came in over the top and purchased over 100 tons of gold. So for them to get about 1,000 more tons of gold, what does that do? It would put them in a place of being the 3rd largest gold holding country in the entire world. And is that what anybody goes for? I doubt it. I don't think China cares that much, but it's not nothing. It's not nothing. They could easily overtake Russia, France, and Italy. And if they want to push it a little bit further, they could overtake Germany and become the world's 2nd largest holder of physical gold. And I would say that normally countries don't care that much about that kind of ranking. But right now China is trying to usher in this new gold-backed currency, the BRICS currency, and a big part of showing that your economy is stable is having a lot of stable assets. And it's going to be backed by gold, so they have to own a lot of gold. That's why India is buying so much gold. Russia is buying gold. Everybody except just about anyone in North America is buying gold. Maybe not in Europe either yet. But that is all starting to change. People, retail investors, are getting more aware of the fact of what precious metals are and how they're going to help you benefit. Precious metals like gold are some of the best performing assets of all so far this year, and it will be going into next year too, especially silver. As you guys know, silver mining stocks will do really well. But remember, there isn't a pure silver mining company. If you mine, you're crunching up a lot of rock. You're looking for copper, you're looking for gold, you're looking for silver. If you find diamonds, you don't throw those in the garbage. It's all about processing the rock, just going through all the rock and pulling out all the valuable commodities from it.
Nous estimons nécessaire que les échanges internationaux soient établis comme c'était le cas avant les grands malheurs du monde sur une base monétaire indiscutable et qui ne porte la marque d'aucun pays en particulier. Quelle base? En vérité,
In truth, no one can really see how one could have any standard other than gold.
And yesterday, oil prices went up 5%. This leads me into my oil spike and fade video I keep talking to you guys about. It's playing out almost perfectly. Every time there's a massive military event, oil prices spike meaningfully, dramatically, strongly. And then when that stops, they're continually, slowly being pulled lower. U.S. job creation totaled 254,000 in September, much better than expected. This is from CNBC. The U.S. economy added far more jobs than expected in September, pointing to a vital employment picture as the unemployment rate edged lower, the Labor Department reported Friday. So it's all good news. It's all going in the right way. I keep showing you guys that the unemployment rate is rising, and I tell you that even if it stabilizes or strengthens a bit, it's going to continually rise into the recession. But we're not seeing the recession yet. People are still talking about a soft landing. Some people might suggest that perhaps we're kind of ignoring the risks. Complacency in investors is one of the number one things that leads to a stock market crash. Consumer confidence is a contrarian indicator. When everybody is thinking that the next move is higher, that everything's going to go up, that there's a plunge protection team, that's when you're most at risk. You can measure complacency by looking at the fear index or the fear gauge, the VIX, volatility index. Non-farm payroll surged by 254,000 for the month, up from a revised 159,000 in August, and better than the 150,000 Dow Jones estimate forecast. The unemployment rate fell to 4.1%, down 0.1 percentage point. And here's a screenshot of the monthly job creation. Saudi Arabia has a superpower. Not only is it the largest exporter of crude oil in the world, its production costs for oil projects are also the lowest in the world, at around just $10 per barrel. But that number is rising. It's not $10 a barrel anymore. It's more like $96 a barrel, according to this article from CNBC. But still, their numbers are a lot lower than a lot of American companies. So they can easily take on more market share and put a lot of pressure on other oil production companies or nations by increasing the supply that they're allowing, not only from themselves, but also from other OPEC members. And as always, I ask you to become a Peter Leeds insider, peterleeds.com/insiders. You get direct contact with me, plus a special newsletter, plus you keep us ad-free, and you help us produce videos just like this one for you. So if you're a subscriber to the Peter Leeds newsletter, I need you to do something. Check your spam folders for any messages we're sending out. We're putting out at least 2, sometimes 4 alerts per week. So if you're not getting 2 alerts, if you didn't get one yesterday, definitely go and check your spam folder, make sure the emails are getting through.